Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dobi. You don't have to be watching very closely at all to know that there's been a whole lot of gyration in our markets, especially our stock and bond markets here over the last several weeks. Now, there are several reasons why that's the case. We're going to talk about that in terms of what the impetus is in a separate video here. But I want to talk about the market movements specifically and highlight a couple of things, but also have a word of caution as well. So we've seen a lot of green arrow, a lot of red arrow, gets folks anxious, especially when it happens sometimes in the same day, whenever those kinds of movements are being made. And sometimes, actually maybe even more than sometimes, folks feel a need like they have to make a change. Well, that's the first point in today's North Main Minute. Be very careful about making changes into significant gyrations in a given day or even a given week and a given month. You want to be very, very cautious about that because it's emotional. I get it. We start to think in straight lines, especially if it's going into the negative. That, oh my goodness, it's going to keep going into the negative. I'm going to lose a lot of money or maybe lose everything. It happens very, very quickly psychologically and emotionally, but you want to be very, very cautious about that. And you don't have to take my word for it. Look at the market movement here over the last 75 years or so. Take a look at the extremes that happened and how much sense it made to change direction radically when that happened. I'll give you the spoiler so that as you're looking at it, you can understand what I'm describing here. It never has made sense to radically shift, pull long-term money out of the market whenever those kinds of things have happened, because inevitably, if you're invested in good things, it has returned and gone beyond where it was even before those negative events have happened. But I understand that it's out there, and I just want to offer up that word of caution. Second big item. Whenever you're looking at these kinds of turbulent times, recognize, implied a little bit my first point there, these happen every couple of years. That's not unique. Now, maybe the impetus or maybe the reason why it's happening is a little bit unique, at least in terms of recent history. But in terms of market gyrations of 10, 20, 30%, and sometimes more, take a look. Not every 2 to 5 years, we're going to have something like this. And frankly, you've heard me say this in other updates, we haven't had a whole lot of negative gyration here in the last couple of years. So we were technically due for this kind of thing. And that's why it's important to keep that kind of thing in perspective. Third kind, this is the word of caution. Third point to keep in mind. And this has to do with things that we're starting to see online, late night commercials, those kinds of things that are playing into fear. And you want to be very, very cautious. Again, this is echoed a little bit in the first 2 points, but you want to be very, very cautious about different investments, different kinds of opportunities, if you will, that are being put out there playing into fear. One of the ones we're seeing a lot is market has come down a lot. Maybe you want to invest in gold. Well, maybe that might be a good idea for you. I'm not saying it's bad or wrong to consider that, but if you're doing it just out of fear, that may not be the right decision to make. Oh, by the way, gold, in terms of the spot price for a troy ounce, as measured by the London Exchange, is up over 35% in the last year, meaning you would be buying into an historic high as far as where the price of gold is. Not saying that you shouldn't do it or it's a recommendation not to buy it or a recommendation to sell it, but rather to make you aware. Meaning that if this was such a good idea, why weren't these same folks giving you a buzz or putting out these commercials a year ago? That tends to be the kind of thing that we keep in mind here over at North Main Financial. But if you'd like to chat more about it, what does that mean relative to your overall portfolio? There are a lot of gyrations going on right now. Are you balanced as you should be? Are there things that we want to keep in mind for whenever the markets rebound? We'd love to chat with you, northmainfinancial.com.